Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are fractionally lower after the S&P 500 closed at a fresh record during Wednesday's session. The major averages received a boost this week after President Trump announced that the U.S. was extending its ceasefire with Iran. Investors are closely monitoring the latest developments across earnings. Entering today, new data from FactSet shows that over 80% of S&P 500 companies that reported earnings this quarter have surprised to the upside. Meanwhile, more than 3/4 of S&P 500 companies have reported a revenue beat as well. And here's what else is on tap this hour. Cybersecurity firm Night Dragon partnered with the NYSE for the first live taping of the Tomorrow Titans Pitch, Defend, Win competition. J.D. Durkin spoke with several leaders, including one who says his firm holds a unique position in the industry due to its legal and cybersecurity expertise. You're going to want to hear what he had to say. Meanwhile, here at the New York Stock Exchange, financial literacy will be in the spotlight this afternoon. The exchange is hosting the Ring the Bell for Financial Literacy event, giving high school students real-world insight into Wall Street, wealth building, and entrepreneurship. One executive participating in the event will tell us what he hopes to take away from it all. And at 9:30 Eastern, NYSE-listed L3Harris Technologies will ring the opening bell. The company is on hand to celebrate a $1 billion investment, as well as a $65 million contract from the U.S. Army. And following Wednesday's market close, tech giant Tesla, one of the largest holdings by weight on the global X NYSE 100 ETF, beat analyst estimates on the bottom line, while also reporting that its quarterly revenue increased by 16% year over year. Shauna Smith, SVP and Senior Investment Strategist at Global X ETFs, joins me now to talk about this and all things markets. Shauna, welcome to the New York Stock Exchange.
Ashley, thank you for having me.
All right, so we heard from Tesla after the bell. What does this mean for the Mag 7?
No, that is a great question, because we did see, at least initially, some excitement that of course tampered just a bit as we head into the opening of the trading day. But I think that this is a general sense of what we have seen so far this earnings season. Earnings coming in stronger than expected, revenue a slight beat, some concern there surrounding their spending plans, and that very much is weighing on the stock this morning. And that is similar to some of the patterns that we've seen in the last several quarters when you take a step back and take a look at the tech industry at large. Some of their massive spending plans have been enough to spook investors on Wall Street right now. So not necessarily anything new or anything too surprising in that report. We know Tesla is down significantly, around 13-14% since the start of the year. We have seen a bit of a bounce back there, so we will see what today's trading day holds. But again, there is a lot to like in this report. You mentioned that earnings beat. That's something that investors, especially those that are fans of the stock, are going to catch on to.
Right, and this is the first earnings season since the Global X NYSE 100 ETF was launched. What are you going to be monitoring as these earnings continue to roll out?
I think more broadly speaking, just the innovation across the tech sector, very much that is highlighted in our new fund. The fund has performed very well since launch, up just around 15-16%. We are seeing the NASDAQ coming off the best month that we have seen, best April that we have seen in quite some time, I think going back to 2020. So when you take a look at what this ultimately means for earnings season and what we are going to be very much focused on is that earnings growth picture. We talk a lot about the Mag 7, the fact that it had been outpacing the remainder of the S&P 500 for quite some time when it comes to earnings growth. That narrative will shift just a bit, or is expected to shift a bit this quarter when you strip out NVIDIA from the Mag 7. So the massive earnings growth that we're expected to see as a whole, when you take a look at that group, most of that is being driven by NVIDIA. So strip out Mag 7, that earnings growth drops pretty dramatically. So ultimately, what does that mean? How investors are reading that? That is really going to be key as we look ahead to what ultimately the impact that's going to have on the AI trade.
And you say that this ETF attracts innovative companies. What are some of the things that the companies on this ETF have in common?
Well, AI to start. When you talk about tech innovation, I mean, it's hard to even come across any sort of earnings report. This earnings earnings season beyond tech that isn't mentioning either their use of AI, what that means for productivity, what they are doing in order to capitalize on that. So that's something that certainly is consistent across the board. But what's different about this ETF versus the others, and you and I have talked about this in the past, is that it's exchange agnostic. And what I mean by that is that it pulls from a number of different exchanges, so you get that broader exposure. It's not only the tech sector. When you talk a lot about innovation today, it's not limited to just the tech sector, so you get broader exposure there. But with that said, it's also concentrated in the fact that it's very much focused on names that are driving the innovation of tomorrow. So you think about a lot of the companies that are changing the technology world and what ultimately that means for adoption 5, 10, 15, 20 years down the line. Those are some of the names that are included within this index.
All right, and shifting to other current events, investors are still closely monitoring the latest developments in Iran. What are markets pricing in amid the uncertainty right now?
No, markets are very much almost just looking past some of the latest back and forth that we have seen with Iran. Certainly some of the big headlines have spooked markets, or they have been encouraged by an extension of the ceasefire. But I think a lot of the focus has gone back to the fundamentals. We talk a lot about the earnings story. That certainly does seem to be a big driver. Tech, the rebound that we're seeing in some of the software names, that very much seems to be driving that broader momentum when we talk about the outperformance of the NASDAQ. But I think more broadly speaking, when you talk about the fact that it is such a headline-driven market, clearly investors are paying attention to what is going on in the Middle East, any sort of disruption. If we do see any sort of change of course coming from the administration or coming from overseas, that certainly does have the ability and the possibility to disrupt some of this positive momentum that we have seen.
All right, and according to the latest data, a majority of traders don't think we're going to see a rate cut from the Fed this year. I understand you think that is a bit hawkish. Can you dive into that for us?
It is a bit hawkish at this point. I think there's a lot up in the air. We talk about the geopolitical events right now. When you take a look at some of the econ data that we've gotten, take a look at inflation, where we have seen some improvement when it comes to shelter. That is enough to be encouraged about, some of that disinflation that we have been waiting and wanting to see. Inflation, not so much as big of a concern. You also have some weakness going on in the labor market right now. So if we do see continuation of that, we do at least think there is a reason to believe that a rate cut could potentially be on the table before the end of the year.
And which sectors and industries do you think are good opportunities right now for investors?
You know, there's been some interest in materials and industrials and financials, obviously technology most recently when you talk about some of the rebound that we have seen since the bottom. Some of the names that have been caught up within the software sell-up, especially looking back to that underperformance back in February. Some of those names, not necessarily does it make sense that they were sold off to the extent that they were. So we think there's opportunity there. And I think specifically within that, cybersecurity, we think is an opportunity. We think that it's not anymore a discretionary line item on companies' balance sheets, very much a necessity. We talk about the threat of AI, ultimately what that means for companies across industries. So we do see opportunity in cybersecurity as well.
All right, is there anything that you're tracking that might be like a little bit under the radar right now that you think we might be hearing about soon?
We haven't mentioned, I don't know how much under the radar it is, but defense technology is an area that outperformed last year. I think there was lots of questions going into this year, what ultimately that growth trajectory is going to look like. When you take a look at Shield, that's our fund with exposure within this space, up just around 15-16% since the start of the year. We've heard very ambitious plans from the White House, from the U.S. government in terms of defense spending, ultimately what that's going to look like in the year ahead. Approximately $1.5 trillion is expected to be deployed there. So we think that's going to act as just another catalyst as you talk about the modernization here of warfare. Very much that expected spend is going to be not only from the U.S., really from a global perspective, is going to continue to push that momentum within the sector to the upside.
All right, Shauna Smith from Global X, thank you so much for joining us at the New York Stock Exchange.
Thanks so much for having me.
Coming up, Oric is a law firm with expertise in handling cybersecurity challenges. One of the firm's executives explained why this gives his company a unique role in the evolving cyber ecosystem. Stay tuned.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself. It's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. In March, cybersecurity firm Night Dragon partnered with the NYSE for the first ever live taping of tomorrow's Titans Pitch, Defend, Win, and Emerging Tech competition. It was part of Night Dragon's Innovation Summit. J.D. Durkin was on the ground and spoke with a number of leaders, including Aravind Swaminathan, lead partner of regulatory and enforcement at Oric. He explained why his firm is in a unique position in the cybersecurity ecosystem. Take a listen.
The sort of bread and butter for us is tech and innovation. And it's something that we really pride ourselves on, thinking about how we use technology to improve what we do. And that naturally dovetails with the cyber practice. So when you meet our lawyers, they're not technological Luddites. Like, we understand the tech, we can have conversations with technical folks. And it puts us in a very different position to be able to help clients through whatever crisis that they're managing at that current time, because we can actually talk the talk and walk the walk. So you get part lawyer, you get part technologist, and it just delivers a much more seamless experience for clients. There's not a lot of translation that's going on, and it allows for a much faster response and better advice at the end of the day.
You've handled hundreds of breaches. Talk to me about a few of the mistakes you still see companies making far too often.
I think that the thing that we see companies making mistakes in is thinking about what their values are first. Not thinking about risk, not thinking about what's happening in the network or the money or the litigation. It's what is our values to our customers? Because at the end of the day, this is about trust. And you have to lean into that concept. And so what we tell clients is it's really hard to make decisions in a crisis, especially in a cyber crisis where you have imperfect information that's constantly evolving. How do you do that? How do you do that consistently and effectively? And the best thing to do is look at your mission, vision, values. And think about, what is your North Star? Who do you care about? What do you want your image to be in the public? And if you look at that, you kind of can't make a bad decision. It's very difficult to do, but if you keep asking yourself, I don't know what to do in this moment, but I do know what my mission, vision, values is because we live it every day. And if I think about what that dictates my decision-making, it makes the path a lot clearer and it gets to better results.
CISOs now face more and more personal responsibility. How is that impacting boardroom conversations?
Well, the first thing is it's the talent pool, right? I mean, the talent pool that we have is declining precipitously on the security ends. And I think what you end up in the boardroom is two impacts. One is you don't have the qualified professionals you need for organizations who can then talk to the boards and can bridge that gap between just being a security professional and being an executive. That's number one. Number two is they because of that risk that they face and because of the declining talent pool, they don't, the security professionals and the board are struggling to get the right type of advice. It's an enterprise-wide thing because the CISOs are concerned with their own personal liability. They don't want to make a mistake. And it tends to be then you end up in this very conservative position, whereas companies need someone to think outside the box and be creative. And that's what they're worried is going to get them into trouble.
You challenged the Joseph Sullivan case, that's the Uber CSO case, all the way up to the Supreme Court, if I'm not mistaken. Talk to me a little bit about that case as you reflect on it a few years later. And why do you think that has kind of stood the test of time and really mattered so much for the industry?
Well, look, Joe's case is the only case on record where a CISO was prosecuted criminally in connection with a data breach. But that is about livelihood. It's not about money. It's not about my job. It's about whether you go to jail or not. And I think that has dramatically impacted the CISO community in this position of like, I don't want to take that risk on. It's not worth it to them. They're already working, they're already overworking constantly, right? They're on 24/7. Every crisis is a crisis to them, and they don't have the ability to take on that risk. And so we took Joe's case on, and we're still continuing to move it up to the Supreme Court, largely because like we believe really firmly that the CISO community needs defenders, needs people to stand up for them and their position and change the landscape so that those professionals who are managing risk every day don't face personal risk. That's the key. Because if they can then say, it's not about me personally and my personal risk, they can be more focused on the companies and doing the job better. Right now, they're trying to sort of battle on two fronts, and it's driving out the best talent in the industry, and it's putting us in a position of people not focused on what they need to be focused on. So we got to take the risk for them personally off the table, deal with the corporate risk, deal with the security risk, and let that move forward.
For companies that are considering going public, they're looking at the IPO roadshow process early on, what are some of those best tips you would give them in terms of heightening their own cyber awareness ahead of a potential IPO?
Well, I think the thing that to understand is that even notwithstanding the fact that what happened in the SolarWinds prosecution by the SEC is still out there, and there's still requirements for what you have to do. And although it sounds pretty easy when you read it on paper, if you have a material incident, disclose it within four days. It's not. What is material? What does that mean? And so really it's about practicing and exercising what an incident is going to look like before you actually have an incident. Because there are some complicated decisions that may have to be made, particularly in the vein of like, are you going to seek the safe harbor, right, under the securities rule? What does that look like? How are you going to do that? What are the considerations around what materiality is, especially for a new company that hasn't sort of gone through that process of having real good muscle memory on like, no, we know what materiality is, right? We've been through this before, because they do it in all sorts of different things. It's not just in security, right? Materiality is materiality. So part of that is getting ready for that muscle memory so that when the moment comes and you actually have to make those decisions, you have practice. You have deep knowledge and deep awareness and a fundamental understanding for who the company is, so that when it comes time to make that decision, you can make it efficiently and thoughtfully without a lot of hand-wringing about like, is this right, is this wrong? So don't let it be a surprise. So that's about practice and preparation.
How are you thinking about the convergence between physical and digital security in today's ecosystem?
So I think this is the most important risk that we face today. Just to summarize, the threat actors have gone from just threats that are, we'll embarrass you, we'll do this with your data, we'll attack your systems, to manifesting that into physical risk for our people and our customers. So the incidence of swatting is up, we see incidents of harassment is up. And so what we're looking at is how do you bring together the physical security team and the digital security team? Years ago, they were under the same roof, and you had a chief security officer that had both. Both of them were her remits. Today, they're not that way. You have a physical security team often and a digital security team, and you have to bring those together. It requires more cooperation, more collaboration, more understanding of what those risks are and how we'll address them. Everything from physical security to the building to security and protection for the executives who are likely going to be the targets if there's an incident.
Thanks, Arvind Swaminathan and JD Durkin for that interview. Coming up, an event is taking place here at the NYSE today, focusing on financial literacy. And one of the panelists at today's event will join me in studio to discuss how his platform is helping families build wealth. Stay tuned.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Later today, the exchange will be hosting the Ring the Bell for Financial Literacy event. It's going to bring together about 200 students to gain real-world insight into Wall Street wealth building and entrepreneurship. Joining me now is one of the executives participating in today's event, Brandon Horn. He is the SVP of Commercial Partnerships at Greenlight, which is a money and safety app for families. Brandon, welcome to the New York Stock Exchange.
Great to be here. Happy Financial Literacy Month.
Happy Financial Literacy Month. So you're here for this amazing event that the NYSE is hosting today. You are going to be on a panel about building wealth early. What do you plan to share and talk about?
Yeah, it's kind of interesting. When we look at financial wealth, a lot of the tools and products, learning are built for adults. And if you look at kind of where kids are, they start to develop their kind of early concepts of money between 3 and 6. And by the time they're 7, they're already having financial habits. And so it's really about getting started early with those good habits they can carry into adulthood.
So tell us about Greenlight. How does it help support families educate their children about finance and financial responsibility?
Yeah, for sure. In my mind, there's 3 components. So starting with the Greenlight, experience itself, we provide a safe way for kids to save, earn, learn, invest, and spend. And we do that in an environment that's safe, where mom and dad can control, and also, Greenlight provides controls to make sure that, they can make mistakes, but they're learning mistakes, and they're not going to kind of carry them forward through life. And we don't water that experience down. So if you go to an investing, research screen in the Greenlight app, you're getting earnings per share and PE ratios and past earnings and analyst reports, because we want them to get comfortable with that information, but we're overlaying a learning curriculum around that. That's tailored to their age, and that side of it's gamified and engaging and video-based content with rewards, et cetera. But we think combining that real-world application with kind of that federal and state kind of vetted financial literacy curriculum is a great way to really set those early foundations. And it also creates a great way for parents and kids to have conversations about money, applying that practical learning in a real world application. And I use it with my own kids, which, I've seen it work.
I heard a stat recently that Gen Alpha, young kids around 12, 13, 14, are talking about investing with their families. Is this an emerging trend that we're seeing with young kids and their, I would imagine, millennial parents?
Yeah, totally. So we launched our investing platform right around the time of the pandemic. And we were really angling for that kind of young teen age like you're talking about. So at that 13, 14, 15, because we're seeing it with our own kids, we're seeing the trends. What's been interesting is we've actually seen that trend continue to shift younger. So our average investor is now 12 years old. Last year, they invested $70 million on the Greenlight platform, which is a 50% increase from the year before. And it's largely being driven by the lessons that we're teaching, which is 50%, there was a 50% increase in the number of kids that are automating their investments. So they're taking a portion of their allowance, they're distributing that into their investments and having it, auto buy, their portfolio to see it continue to grow.
That's amazing. What is the impact of educating a child at that age and getting them interested in the markets and investing and growing their money?
Yeah, so I talked a little bit about kind of the age that kids start to form these relationships with money. What we've seen, kind of if you carry that forward, without that, a lot of times a young adult's first interaction with money is a negative one. Either, they feel insecure because they got started late on investing or savings, or they're building themselves out of a bad debt situation. But if you carry that forward to parents with kids whom we serve, about 70% of those say that they have financial stress on a weekly basis. That's a compounding effect that we're trying to disrupt early.
All right, Brandon Horn, SVP of Commercial Partnerships at Greenlight. Thank you so much for joining us at the New York Stock Exchange, and best of luck on your panel today.
Thanks for having me.
Coming up, NYSE-listed L3Harris will ring the opening bell to celebrate its latest achievements. Don't go anywhere.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, NYSE-listed L3Harris will ring the opening bell as it celebrates a pair of recent achievements. Last week, the defense tech firm announced that it's investing nearly $1.3 billion to expand its manufacturing site in Orange County, Virginia. The firm says this will boost its production of solid rocket motors for the U.S. Department of Defense. And earlier this week, L3Harris announced that it was awarded a contract north of $65 million from the U.S. Army to produce solid rocket motors for the Army Tactical Missile System. The company develops end-to-end tech solutions connecting several domains, including air, land, sea, and cyber. Let's go to the bell. You just saw L3Harris chairman and CEO Chris Kubasik ring the opening bell as L3Harris celebrates some exciting news, and the stock market is officially open for trade. Joining me now is Ben Emmons. He is the founder and CIO at FedWatch Advisors. Ben, so great to see you.
Good morning, Ashley. Good to see you too.
Good morning, Ben. So what will you be following most closely as trading gets underway?
Well, we have a lot of earnings today, actually, and I was kind of looking at it like, our company's already preparing for inflation because that's, of course, the hot topic now. Seems that that's not yet playing so much of a role in the earnings calls, but it's certainly getting more attention. Say that airlines, for example, like American Airlines, already like discounting that these jet fuel costs are becoming, a problem for margins, and several other airlines that reported that too. And what people start thinking about is like, how will all of this be passed on to the consumer? So earnings are great, right? They're strong. We have a market that's strong, but there's going to be some challenge from here if inflation becomes more of a problem. So that's what I'm watching, particularly against just what's going on in the Gulf itself. It seems to be we're kind of at a standstill again, but the market seems to be more focused on the fundamentals, the earnings.
All right, and Ben, I understand that you see some comparisons between outgoing Apple CEO Tim Cook and Kevin Warsh, who President Trump has nominated as the next Fed chair. Can you elaborate on that comparison?
Yeah, it was a bit of a thought experiment, actually. He was sort of trying to figure out, like, if you saw that tweet from Trump on how he looked at Tim Cook as a leader, right, as seeing him as an amazing manager, and he sort of, you take those characteristics of what Trump seems to be like, well, if you're doing the right way, this is the way to do it, how Tim Cook does it. That's, of course, really important in the case of Kevin Warsh, considering this pressure that's put on himself and the Fed to lower rates, and how we go from here as this probe hopefully ends. So, for Kevin Warsh to be successful with the president itself, which is, by the way, an important thing, because the relationship between the Fed chair and the president hasn't been good over the last number of years, and we can definitely look back at periods of market volatility directly attributed to, let's say, not a very good relationship between Powell and Trump. That Warsh will come in and say, okay, I'm going to have a much more open dialogue with the president, far more reaching out to him, talk about the economy, talk about solutions, being hands-on and being a good operator. All, characteristics that Trump attributed to Tim Cook being such a successful manager, making Kevin Warsh potentially this amazing Fed chair. And that's key, actually, because the more that relationship works better, I do think we're getting less market volatility, therefore it's better for the economy. So really key how Kevin Warsh manages his relationship with the president.
I hear you say that there might be increased communication between Kevin Warsh and President Trump. What do you think a Fed under Warsh will look like? And do you think the chances of a rate cut are going to increase?
Well, there's definitely going to be a change in terms of communication, because before we never had a Fed chair that was going to be so outgoing in terms of reaching out directly to the president. It's a bit of a strange optics, but that's likely to happen. In addition, that the way the Fed has been communicating to the public with its staff economic projections, with its dot plot, he wants to change that because it has caused more confusion than actually, clear communication from the Fed where we're heading. And most of all, he doesn't want all these Fed members out on the media talking about the Fed decision ahead of the decision. He feels the debate should happen in the meeting itself and then make the decision and then go out to the public to explain the decision. That will be different too. So I think, and then a balance sheet shrinkage obviously is another part of it, but I think it's a Fed that's going to be different in its communication style, perhaps more focused on meeting by meeting communication than being out there on the media so much, which, good and bad, right? Pros and cons on that. But I do think it's a way where probably markets are going to be a bit less volatile about Fed communication, uncertainty about the Fed than we had seen before.
And you say that Warsh's historical rate views align with the president's instincts. Can you elaborate on that?
Well, the way to think of that is that he, so one, Walsh looks at current interest rates also as restrictive, and that he thinks there's room to cut them. So that's the alignment on the one hand, but it's also just historically that interest rates should be set more like real time, like driven by the economy where it is currently, and not so much about some sort of a staircase or mechanical approach. And this is what this president is about too. He actually said in a different network in the interview that he is actually open to have the Fed raise rates to bring inflation down if it were needed, right? And I think that's the difference this time. We're not just going to hike rates just to get ahead of inflation. We're going to do it when it's needed. Same thing, we're going to cut rates when it's needed to stimulate the economy. I think that's the alignment between Kevin Walsh and the president.
All right, thank you, Ben Emmons, founder and CIO at FedWatch Advisors.
Thank you, Ashley. Good to see you.
Great to see you. Still to come, Barcelona-based Stark Future just announced a new financial milestone highlighting triple-digit revenue growth. Its CEO will join me in studio with the details. And meanwhile, agentic AI was one of the major themes at March's RSA conference. One leader told our very own JD Durkin that the technology is both very scary and amazing at the same time. You're going to want to hear why. And plus, the NFL draft kicks off tonight from Pittsburgh. According to Front Office Sports, it will be historically lucrative for first-round picks like quarterback Fernando Mendoza. You won't believe how much guaranteed money will be locked in. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Earlier this month, Barcelona-based electric motorcycle company Stark Future says it delivered a 212% year-over-year revenue increase during Q1 of this year. And joining me now to talk more about it is Anton Was. He is Stark Future's founder and CEO. Anton, welcome to the New York Stock Exchange.
Thank you, Ash. Nice to be here.
So that is major growth, 212%.
Yeah.
Tell me about it.
Yeah, so 3x growth year over year is, of course, incredible. And, it comes from adding more categories. So we started with motocross, where we took a global market share of 3% the first year. And then we added enduro and then supermoto. So, we just increased the addressable market massively over 1 year, and that's where the majority of the growth is coming from. So that's very nice.
And you say the headline is not just the growth, but it's the quality of the growth. Can you elaborate on that?
Yeah, so I mean, we didn't just lift the top line, but also gross margins grew massively to now above 40%, which is of course super, super strong for a vehicle manufacturer.
All right, and tell me about Stark Future, a motorcycle company. What exactly are your offerings?
So we have a quite simple goal. We want to build electric motorcycles that are better than combustion. We want to inspire the world to change to electric by simply making better products. And I think we have achieved quite a lot so far. We are the world's biggest electric motorcycle manufacturer today, so that's a very nice achievement for us. And we're going to continue building even better bikes in much more and much bigger categories.
What differentiates you from other electric motorcycle makers?
I think the big difference is that we have such a clear goal, which is we need to build bikes that are better than combustion. And I think there's a lot of bikes that they are electric and they work, but they are not a better alternative. They are a compromise for sustainability, and that's not what people want. What is unique with us is that we do bikes that are simply better, and what's really, really hard is to achieve that, of course, which we do through innovation and deep vertical integration.
And you took 50% of market share in Germany in 1 year. How is your company moving into larger on-road motorcycle categories?
Yeah, that was quite cool. So 2024, the electric share was 0%, and then in 2025, 50%. I mean, that is, I think, can never have happened something like that before. So it's quite incredible, I think. And now we're moving into much bigger categories, of course, and we're targeting to achieve the same.
All right, and you said in a statement that you think 99% of motorcycles will be electric by 2035. Do you plan on just taking over the whole market?
No, I don't think that we will take 99%, but I think that electric will, and the reason is that we are now reaching a point where electric is already better than combustion, and in 10 years from now, electric will be so far ahead of combustion in terms of performance, cost, weight, all of these factors, that the only reason to buy combustion at that point will be for nostalgia, which will still exist, but I think that might be 1% or so. All logical reasons will be to buy electric at that time.
And what are the differences of riding an electric motorcycle from combustion?
Well, you have, in general, you will have much more torque, which is also much more controllable. So it's easier to ride, more fun to ride, because you have more power at your hands, essentially. And it's much more tunable to your liking, so you can adapt the behavior of the bike much better. Of course, you have much less maintenance, you have no noise. And I think the general feedback from our customers and people that try it is just that it's more fun. And I think this is the key aspect, really.
And people like having fun when they ride a motorcycle.
Yes. That's the key.
Okay, maybe that's why you took over 50% of market share in Germany. And long term, what are your goals for Stark Future?
Yes, we want to be the company that leads the motorcycle industry to transformation to electric by simply building better products and inspiring both the customers but also the industry. So that's what we want to achieve.
All right, Anton Waas, Stark Future's founder and CEO, thank you for joining us at the New York Stock Exchange.
Appreciate it.
In other news, cybersecurity leaders gathered at this year's RSA conference in San Francisco to help chart the future of the industry. One key difference, Baker Agentic AI. JD Durkin sat down with Jason Clark. He is Sarah's Chief Strategy Officer, and asked how leaders are viewing the evolution of agentic. Take a listen.
Agentic is very scary. It's scaring everybody, but it's amazing at the same time. So people get the value that it can provide, but it's like all of a sudden you've got an agent that is logging in as you, and should it be able to do everything you can do? Should it see everything you can see? The answer is always no, but yet you're giving it your logins to each of these applications and all of your data. And 91% of the data that you're giving it access to, you've not even looked at ever in your life. So all of a sudden, you might have access to how much everybody makes in the company, you don't even know. But your AI now knows, right? And so it's creating the attack surface is becoming 1,000 times greater. And so this is so the opportunity is rich of what it can do. It can work for you all night. But again, from a security standpoint, it's the biggest, fastest growing attack surface that's ever been in history.
Do you see a reality where companies are still experimenting, or are the stakes now a bit more real, at least at a business level?
Look, the stakes are real. Everybody's experimenting. I think nobody's got it figured out. That is for sure. I ask every CEO, every CTO, every CISO I talk to, how much productivity are you really getting? And you'll get there's a couple engineers that are 10xing themselves. They were already the best engineers in the world. And then you've got other people, most people are getting 30 to 50%, and maybe some people give an answer of, hey, some teams are getting 3x. So, the opportunity is there, but nobody's really figured it out because we don't even know what the true agentic platform is going to be. Is it going to be cloud-bot? Like, people don't know yet. Every single day we have a new innovation. And again, this is what, like, from a security standpoint, it's scaring the crap out of everybody because they haven't figured out how to secure it.
You raised $400 million. Talk to me a bit about the ways you're already deploying that capital. What does that execution look like for you?
Yeah, it is. Everything's about being like, look, securing AI starts with data. Like, there's I talked about this agent that you're giving it access and saying, yeah, go be me, but be me all night long and be 100 of me. But as you're doing that, you can't create guardrails around it, because I just asked you, like, would you give it everything that it shouldn't see everything you can see. So those guardrails is about data, right? Like, okay, be me, but don't see everything and provide everything that I could do. Like, don't give the crown jewels away, right? And so how do you do that? Well, everything centers on data. That's the real risk. Like, the job, we renamed this industry to cybersecurity from information security. It really is information security. Somehow it became cybersecurity because it became about the threats. But I think we're remembering all of a sudden it's about data. And so AI is really highlighting that. That's why we're doing so well. And we kind of announced we're the 7th fastest growing company in the history of the world. And a big part of that is everybody's waking up to AI starts with data. I have to know my data, what's going in the models, what's coming out of the models, what agents are doing. And so that's the first initial motion of that, right? So that's that. So all of our money is going into agentic and AI security on what we've already built, is this data security platform.
Before I let you go, what does getting AI security right actually look like? And how is Cyera helping enterprises actually do it?
Starts with, first you have to find it. Find all the data with, like, what is amazing innovation that we had and that nobody else has in the world is AI native, leveraging that to understand the context and the intelligence around all your data versus and doing that using AI versus everybody else did it with regular expression before, and a little bit of machine learning. So find it. Find the data, who has access, who did access, what did they do with that access, are they human, are they non-human, are they third parties, and then the next step is find it, then fix it. So so that was why we bought a DLP company, but a very next-gen innovative DLP company to say, you've got all these data controls, go over top of all of it, sit as this brain. So we're creating the brain of all of your data, all of your risk, and all of your AI. Right? And then the nervous system to orchestrate leveraging all of your muscles. So it's really, I tell people, they have DLP projects, they have DSPM projects, or they have AI projects. I'm like, guys, it's all the same. It's all about data. It's a data security and AI project. And so you have to reframe the thinking to find it, fix it, and then enable it. So the biggest shift is getting CISOs to stop saying no to AI. I'm like, I'll give one real quick story. I met with a CISO yesterday. She was like, look, my CEO is saying that our company has a massive threat. We're going to be disrupted if we don't quickly adopt AI. But the risks are too great. I can't say yes. And I'm like, your CEO is saying you're going to die. And you're saying, no, we're not going to adopt AI. How can you do that? We have to say yes. So my job is to show you that I've got the guardrails built for you to say yes to AI and with some controls. And let's change your conversation. And by the way, how much would your CEO be willing to pay for that? And she's like, probably name the number, because he's talking about billions of dollars to gain or lose. And I'm like, that's a pretty big check, unlike the way you've ever thought about security before. It really moves CISOs to not just be CISOs, but to be chief data officers and chief AI officers, if you think about it, because they're the first person using our tech. They're the first person in the company to actually know how much data they have in the company. There's no CISO in the world, if they don't have Cyera, that can answer how much data is in the company and what's its value, how important it is, how it's being used.
Thanks, Jason Clark and J.D. Durkin for that interview. And coming up, the NFL draft commences tonight in Pittsburgh. But where top prospects like Fernando Mendoza and Arvel Reese go won't be the only story taking place. You're going to want to stick around for the details.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. The future of 32 NFL franchises will be changing this weekend with the first round of this year's NFL draft kicking off tonight in Pittsburgh. But where top prospects end up, such as reigning Heisman Trophy winner Fernando Mendoza, won't be the only story unfolding. Joining me now is David Rumsey. He's the reporter at Front Office Sports. David, welcome.
Hi, thanks so much for having me.
All right, so the NFL draft have been moving cities each year after 2014. What opportunities does this provide both the cities like Pittsburgh this year and the league?
It's really just such a great opportunity for a city like Pittsburgh that is not really on the list for hosting a future Super Bowl. Of course, a cold weather city, outdoor stadium. But in the springtime, late April, you can have upwards of 500,000 people attend this NFL draft in Pittsburgh. The record is nearly 800,000 in Detroit a few years back. But this is just a way for the NFL to bring one of its premier events to really any city that it wants to across the league, whereas, maybe there's only a dozen or less so cities that would be able to host a Super Bowl.
All right, and it's virtually a given that Indiana quarterback and Heisman Trophy winner Fernando Mendoza is going to the Raiders with the top pick. How important is it to land on the top overall pick in today's NFL, particularly when it's a quarterback?
Well, it's extremely important, like you said, when it's a quarterback, and it's not a 100% success rate, even though every year, pretty much the past 4 years, there's been a consensus number one pick at quarterback. They don't always pan out. We've seen that throughout the history of the league. The Raiders are particularly interesting because Tom Brady, the 7-time Super Bowl champion, is a minority owner in Las Vegas, and he is really kind of running the show behind the scenes. So he has certainly given his sign off on Fernando Mendoza and will certainly be helping him as he progresses. He may not be the starter on opening day. They did sign Kirk Cousins to a pretty lucrative contract, so that veteran will probably have the call on opening day, but certainly expect Fernando Mendoza to get the call up later this season, and the Raiders will really be counting on him moving forward.
All right, and you recently wrote a story that the amount of money guaranteed in first-round pick contracts will exceed $800 million for the first time ever. Besides general inflation, what else is driving these salaries higher?
Yeah, certainly inflation, but of course the NFL makes more money every year than it did the previous year. Look at that graphic on the screen. It kind of goes with the rise in the salary cap. The NFL for the first time this year is going to pay out more than $300 million per team to its players. And, just a few years ago, that number was under $200 million. So the money that goes to incoming rookies and first round and draftees it goes up year by year too. So it shows how much money the NFL is bringing in, whether that's media rights, ticket sales, sponsorship revenue, everything all across the board.
All right, and one source of income for the league is its massive media rights deal. We're in the middle of an 11-year, $110 billion contract, but we understand the league might want to return to the negotiating table. Why is that?
Certainly it is because the NBA got a massive media rights deal of their own, $77 billion, which I don't think the NFL was too happy about, at least compared to their deal of $110 billion, like you said. So if you look at the ratings, obviously nothing comes close to what NFL games draw, particularly primetime games, late afternoon Sundays, and then, of course, playoff games. So the NFL has an opt-out after the 2029 season for all of its media rights deals and has said it will be doing that, but it would like to actually renegotiate deals earlier than that. One thing that is happening is because of the ownership transition with Paramount, which owns CBS Sports, the NFL does have the right to go ahead and renegotiate that deal due to a clause with the transition of ownership. So if they are successful in doing that and getting, a 50% or even double increase on the $2 billion annually that CBS is paying, then they'll start going to their other partners. Hey, Fox, NBC, ESPN, look, we got more from CBS. It's your turn to pay up now.
All right, we have about 30 seconds with you, but former Steelers coach Mike Tomlin is joining the Sunday Night Football team. How much of a win is this for the network?
It's a great win, but I expect it to be only a short one because he's still a young man when it comes to coaching terms. He's going to be great on the studio show, provide a lot of analysis, and he has a lot of war stories to tell from a couple decades coaching in the league now. But I guarantee you that next year and even the year after that, if not, he'll be one of the top coaching candidates to get back into it if he wants to pull what Sean Payton did, where take a year off, work TV, and then go back and get another high-level coaching job in the NFL.
All right, thanks, David Rumsey, reporter at Front Office Sports.
Thank you.
Before we go, let's take one last look at the markets. The Dow down about 0.4%. The S&P 500 down fractionally, less than 30 minutes into today's session. This comes one day after the S&P closed at a fresh record, closing above 7,100. That is going to do it for us today on NYSE Live. I will be back in the anchor chair tomorrow, bringing you the latest on the conflict in Iran, earnings, and everything markets here at the New York Stock Exchange. We will see you tomorrow.
Welcome to the public market.
The New York Stock Exchange is the cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?